right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Now, first of all, I want to say congratulations to anybody out there who is a Chicago Cubs fan. And for anybody who is a Cleveland Indians fan, if for those of you that watch American baseball, that's a tough loss. But for somebody who's not really a fan of either the Cubs or the Indians, other than, I know so many people that are Cubs fans. It was a great game, and unfortunately, I stayed up really late last night, and so I am going to pay the piper today. I stayed up and watched the entire game, and so I'm hurting. Hold on one second.
Greatest game ever.
Yeah. Wasn't it great?
Oh my God, it was so great. Yeah, I mean, just such a. I mean, you had to root for both, but you really, deep inside, I think a lot of people wanted Chicago to win. You know?
Yeah, that's the thing. It's like you kind of root for the underdog, and but what a great game. I mean, the baseball is not typically a very exciting sport, I don't think. I mean, I only really watch the playoffs. I can't watch the whole season; it's just too long. And to sit through a whole 3-hour game during the season, after and you got to watch 100 some odd games if you're following your team. It's like, I might watch a game here and there, but I typically don't watch a lot. But man, talk about like the intensity of the game. I mean, it was just like, squander a three-point lead, and then you go to tie into extra innings, and then a rain delay, and then it's just like the errors, the multiple errors, the barehanded ball errors from Baez. It's just like the catcher. It's like, oh my God! But all in all, it was so exciting. I thoroughly enjoyed it as a fan. Really enjoyed it. And I've enjoyed the whole series. Actually, it's been pretty good. So,
but you're paying for it today.
Yes, I'm paying the piper, and I'm sure a lot of people are too. It's not just me.
Well, hey, you were 2 hours earlier, so it was what, 10 o'clock your time when it was over?
It was 10 o'clock my time when it was over, and I still got up at 3. And by the time I went to bed, it was 10:30. So 4.5 hours of sleep. Yeah, I know.
All right.
Anyway,
let's get your thing. I'll talk to you.
Thanks, Skip. Yeah. All right, guys. So anyway, congratulations to all you Cubby fans out there. It was, like I said, it was a great game. So let me just mention a couple of things before I get into the analysis. I have dwindled down my dollar positions to basically almost none. I mean, I've got a little New Zealand dollar short that I'm sitting in right now, but that's it. And I'm probably going to be I'm probably not going to be taking a lot of trades going into the next couple of days. I think it's too risky. I'll be out of my New Zealand dollar by today. I'll be out of it. I won't be in any dollar trades at some point today. So any dip in the Kiwi, I'm probably just going to take some profits if I can get it. Or profits, actually, just minimize my loss, really. It's just trying to wiggle out of this trade now. But I've reduced my positions quite extensively, and I plan on keeping it that way going into the elections. There has to be something that really jumps out at me for me to trade at this point. Liquidity is getting really thin. The markets are going to get even more choppy for the next couple of days. Like I said, I was short the U.S. dollar Mexican peso. I closed out my position. It dropped 800 pips like a poll came out and showing Clinton in the lead on a CBS poll, and the damn thing just dropped another 800 pips that I could have made, some good money. But it's like that could have very easily just happened going against me. So I'm happy to be, just kind of out of positions at this point and just, being sidelined. But I will still go through the analysis process because it's important. If it, because I always tell you guys, and if you haven't heard me say this before, you can hear me now. Trading is not like riding a bike. You have to stay on top of your analysis. You have to stay on top of your analysis every single day. Because if you don't, you'll lose that edge that you have. So, whenever I take a week off or a few days off, it's hard for me to jump back in if I haven't been paying very close attention to the markets because, I'm just not familiar with all the turns and the levels and the prices and the price action. In order to stay sharp going into the election, even though I might not be trading a whole lot, it's so important to go through the analysis process every day. And that's, that's why, obviously we do it, we'll do it anyway, but I'm just telling you for future reference, because a lot of people feel, well, I'm not trading, I'm just going to go ahead and I'm going to go clean out my garage or, go screw around for the next couple of days since I'm not going to be trading. I don't do that. I'm a very big believer in staying on top of your analysis because if you don't, you're likely to lose your edge, and that's to me a fact. Okay, so all right, let's go into the euro dollar, and here's the euro. Euro is pulling back. I am out of my short now. I did have a short position. About, my cost average is around 80 and I got out at like 75 and I'm just happy to be out. But I do think that there is some downside here. Now we basically have rejected at the 50% retracement, and I say 50% retracement because it's really the 50% retracement of the move from August to the lows here in October. 50% retracement, and today, sorry guys, I'm going to yawn a lot today, just so you know. Today, right now, we have a shooting star. It's early though. I wouldn't read too much into what you're seeing here. But if for some reason we close at 110.50 today, then you'd have a bearish engulfing candle, which means that going into the non-farm payroll could be rather interesting. I don't know if that's going to be the case, but the one thing that I must note here is we made a brief new high overnight. Okay, brief new high, and then we've fallen. All right, so I do think that support today is going to be at 110.50. And that is going to be really key support here, 110.50. That's going to be really key support for bulls. I had my take profit at 52, which I obviously canceled because I got out of it early. It was just in case overnight it dropped down to 52. I wanted to make sure I got out. But like I said, I'm not in it anymore. Resistance. Now, if you look at basically, all this, here, I'll just take this back even further. Previous support, current resistance, and that all comes in at the overnight high, which is at 111.25. I'm going to write down 111.25 is key resistance. So really what I'm expecting today, just so you all know, is I'm not expecting a dip much below 110.50, and I'm not expecting a rally much above 111.25. Now the FOMC, or FOMC, sorry, NFP tomorrow might be the catalyst that drives us out of this range, but even a break from here to here, okay, is probably going to be met with, some buying or selling. So even if we came down a little bit towards 111, you're going to get buyers ahead of the election, and if you get a rally towards 112, you're going to get sellers ahead of the election. So I wouldn't get too aggressive, even if we pop out of this little range here, um, because you're going to get positioning ahead of the election. The thought process, in my opinion, is, Donald Trump victory, bad for dollar. Hillary Clinton victory, good for the dollar, and vice versa. Um, you know, you know, Trump loses, it's good for the dollar. If Hillary wins, or loses, it's going to be bad for the dollar, in my opinion. Okay, but positioning yourself ahead of the election is just, I think this election is going to be so tight that you have to be very careful in doing so. Okay. Sorry, like I said, I'm going to be yawning a lot because of staying up so late last night. All right, so here's the pound. So the pound, we got that move above 123.25. We started to squeeze, and we're currently squeezing. Now, the UK Parliament is going to require approval of a Brexit. That's what the findings came out today. Now, we got the pound squeezing as a result. Does that mean that a Brexit won't happen? No, not at all. And I think that's the I think that could be a misconception that the market is pricing right now, thinking, oh, this is such good news that the pound should rally like 800 pips from here. I don't believe that to be the case. I actually think that the cable is going to stall at some point. It because even with a even with a the UK Parliament voting on Brexit, the question you have to ask yourself is, do you think that they're going to stop it? Because like I said, if they do, there's going to be a big, big, big uproar of the people. And, it was voted on by the people. And so you're just going to have a huge, huge uproar in the UK. And I would assume Parliament takes that into consideration. So it's way too early to say, oh, they're going to block it. That's not necessarily true. They just want to vote on it. So I think the pound, any rally to this 124.81, which would be a 161% extension of the last range that we've had, also matches up with previous resistance over here. That's going to be really tough to get above. So I think 124.80 is going to be very key resistance. Now, I was long the pound Aussie. I bought it after the news came out, and I sold it, made a quick 47 pips or something like that. Took my profits off the table, and I'm done. I'm done with it. I don't want to mess with it right now. I'd rather not. Even though the pound could go higher, I think you have to be very careful chasing the cable while it's up 118 pips right now. I mean, it might be up 150 pips at some point, but you don't know. I think it's maybe even a better fade up at these highs. I'm not trading it. I'm just speaking out loud. All right. Support, though, is pretty easy. If you want to play support and play long the pound, I think that 123.25 is going to be really a good support level to play to the long side if you want to do that. Now, I'm going to put us in a range. I'm going to put the pound dollar in a range just because we've broken higher out of this small range, even though it's still a very bearish trend. I'm going to put it in a range for now because I think you've got to be open to, buying some dips and, selling some rallies. It's still an overall extremely bearish trend, and but I think that you can played both sides of this one now. Okay, for now. Okay, so I'm going to just put it in a range for a while because I think the dollar's range bound. I mean, you get into this we get past this election. I think the dollar's going to have some better direction. But as of right now, eh. All right. Let's go over to the Swissy. I did sell my Swissy today. I did take a stinker on it. My cost average long was at like a 97, I don't know, 97.80 or 97.90 or whatever. I got out of it this morning real close to where we're at right now. What you'll notice here is we have a confluence of support. We have the 618 retracement, we have the 786 retracement, and that's been holding. Now, I do think that any rally is going to be met by sellers. The question is, how far can we bounce? Before we get there. And this resistance still actually looks pretty valid here. That resistance we wrote down yesterday is 97.60. I still think that that is a level that will be contested, all right? So 97.60 is resistance for right now. We are in a range as well. Support, well, support's at 97. Yeah, I know 96.95. I guess we were right 96.95, but that's support. All right, let's take a look at the yen. Now the yen, it's really interesting where the yen went overnight. So the yen, let's put on a daily candle really quick. We went to this 102.80, and we actually went to the 127% extension here, and we bounced. That 102.80, and we went as low as 102.54. This is all really major support now. I think any dip now to 102.80 is going to be bought. Any dip now. For today, anyway. 127% extension, 50% retracement. We overshot a little bit. So now if you find a dip down to 102.80, I think that's going to be very, very good support for today. All right. Now, sellers, let's see here. We're right at previous support right now. But you got to assume that we make it past that. We're on it right now, so I still think this is pretty stiff resistance right where we're at, but we're basically at it. You see it? I mean, we're basically there right now. So assuming we continue to break higher, 103.50 should be, there's some previous support. You can see the spike highs on these 4-hour charts. Comes in right around 103.50. That should offer pretty good resistance today. We're in a range. Okay. Let's go over to the Canadian. Let's get the Canadian done really quick. Here's a dollar Canadian, still holding up pretty damn well. Even with crude stabilizing a little bit, now we're still below 46 bucks, but even with crude stabilizing, the dollar Canadian's not pulling back. So, I think the risk is if crude continues lower, we're going to spike up here in the Canadian. So, 134.30. I think we had 134.33 written yesterday, and then this support here at 133.50, and I think we just got to watch that range carefully. 133.50, 134.30. And we're in a range. Actually, I'm sorry, this is bullish. I say it's bullish because it's really, still holding up pretty well. It's still trying to break higher. I think you have to kind of keep a bullish slant on it while it's sitting above, this 133 level right here. All right, guys, I'm going to go grab some more coffee, yawn some more, and when I come back, we will finish up the analysis on all these majors. If I sound tired, it's because I am beat tired right now. Okay, I'll be back in a few minutes. Don't go anywhere. All right, guys, Bank of England is keep rates unchanged as expected. It's not like we expected anything to come out of the Bank of England anyway. So yeah, I forgot about the time change. So here's the pound spiking up just a little bit. Has limited tolerance for above target inflation. Oh, look at the pound's getting a little bit of a lift here. That's the inflation report. Policy can respond in either direction to outlook change, blah, blah, blah. So we hit new trend highs in the pound. That's pretty stout. Okay, watch this 124.80 level. Remember, I'm not trading it. I think this is going to be pretty key resistance, though. Think about it being up. Right now, it's up 160 pips right now as we surge into resistance. So, I mean, you got to be really, really careful with longs up here. Hit a high of 70, 72. And watch these prices. Remember, okay, so just if you guys don't remember, okay, here we go. Remember, we're at the 161% extension, right? Pound just surged right into it. This is really key resistance. I'd be very careful trying to chase the pound into here. Even on a break above it, I mean, we might actually probe 125, but is it sustainable? Is the question. I have some good comments from Nick about the UK. I'll read it here in a second, Nick. Good comments. I'll read in just a second. I'm just kind of watching price action here, seeing what the cable does up here. New highs. New highs again in the cable. Here we are at 80, or close to 80. Remember, this is 161% extension. Man. New lows euro. So that euro pound's getting smoked right now. That's what's getting just clobbered. Pounds above 80. There's really, really good resistance here. Man, I got out of the euro too early. It's all right. I'm okay with it. Okay, watch this. Remember, we hit 124.84. Okay. Remember, this is really key resistance up here. I don't think I would be chasing the pound up here. Here, let's go to a 5-minute chart. See how it's stalling right here? It's a very dangerous level for pound longs. I think if you're long the pound, you got to tighten your stops here. I really do. Here we come. We'll probably come back down to 124.50. Here we come down to 60. Let's see if we come down to the 50s. I mean, it could pause here, give you guys opportunities to get long for those of you that are bullish. I think after, oh, here we go, 58, 59, 60. See, I mean, after being up 100 and whatever pips, I mean, 160, 170 pips, I mean, we're just kind of coming off here. I don't think it's going to come off too aggressively, but we might get into the 50s, might even dip into the 40s. So for if you're looking to reload on longs, I think down here, I'm hoping you guys can see my line. So let's say like right here, somewhere in this neighborhood right here, it's probably a good place to load up for some longs. Just even if it's for a 10, 20 pip move, scalping type of move. I'm just looking at the hourly wick. To turn it really negative, we'd have to drop all the way down to the 20s, which I don't think is going to be the case. But we'll see. Okay. As the pound stalling at the 161% extension, we all know why, as noted earlier. 161% extension, resistance back here, and we're just kind of stalling. I don't know what I would do with it other than try to buy a dip if we can get one. That's a more of an if question, right? Not a when. It's a if we can get some sort of dip in the cable. It's still holding up very, very well. Mm-hmm. Maybe the 161% extension ends up being more of a bump in the road. We'll see. All right. What was I gonna do? Okay, so let's go over to the. Did I do the Canadian? Yeah, I did the Canadian. Let's go over to the Kiwi. All right, so here's the Kiwi, and we'll keep an eye on the cable too. It's still at 80. Here's the Kiwi dollar. It's not doing anything. I still have a New Zealand dollar short, which I'm not happy about. I'll tell you right now, in Asian trade, we spiked up to the 127% extension. The Here, let me get rid of this. The underside of, let me remove this too. We don't need that one. 127% extension, 618 retracement of this whole fall. Okay. And you can see it, 618, and we're having some problems. However, remember, we'll come off a lot of good New Zealand economic data. Support is really critical for bulls right here. I'm assuming stops are starting to build underneath the 72.75 level. Okay, so that's got to hold for bulls. 72.75. So what? Yeah, 72.75. That's going to be important support. I also think that this resistance here, this failed breakout attempt, I'm going to type it in as 73.30, is now key resistance. I think if you want some guidance on what to do with the Kiwi next, you let it break out of one of those two levels. Okay? Okay, let's go over to the Aussie. By the way, the pound's still sitting at 124.80. Sitting there, it's highs of the day. I mean, just a few pips off the highs. It's holding up pretty well. What am I doing? Okay, Aussie. Pound's at its highs. New highs. Like I said, I think it could breach. I actually think the cable can hit 125. Probe stops above there. All right, here's the Aussie dollar. The Aussie dollar is in this apex of the triangle. Okay. Now, what is going to move us out of the triangle here is probably not non-farm payroll. It's probably just going to be, the elections. So whether we breach 77 cents or 76.50 is going to be a result of the elections. That's it. Okay. So it's probably a decent short here, and I'm not short the Aussie. I'm just talking. Actually, I think I'm gonna sell some. I sold a little bit of Aussie dollar. I did. I sold a little Aussie here, just because I know my risk. It's above 77 cents, right? I mean, that's it. Support will be the spike low down here, which is at. So when did we get down here? Did we do that last night? 76.36. So 76.30. All right, 76.35. 0.7635. Resistance is 0.7. Ooh, no. Shoot. I did not mean to do that. 72.75, right? That's key support. I accidentally clicked on it. So 0.7700. It's major resistance. And we are in our range, obviously. Okay. Okay, let's take a look at the dollar index. Pound's still stalling around the 80. So here's your dollar index. The dollar index found some really key support. 38% retracement of this entire move. 127% extension of this move. We found a lot of support, and oh wait, that's a 4-hour chart. Let's go over to the daily. So the low, whatever the low is, $97.04, that is support. Let's go over to the 4-hour. So resistance, let's get rid of this. So this hourly spike high here, 97.50, has got to be a resistance, because this would, if we break above that, then we start putting in higher highs on an intraday basis. So $97.50. And we're in our range since we cracked a lot of key support. Peso. So, like I said, I'm done with the peso. This is, hold on. That was the gap fill. We did the gap fill. Now from here, pound's still near its highs. $19.25, 1954, 1925. Oops, I wrote 18. 1954 is resistance. And we're in a range there. Okay. Pound still looks good. That new highs for the cable. Like I said, let it breach 125. See what it does up there. It's squeezing though. It's up 185 pips on the day. It's a good day. It's a good day by any currency pair standard. Rick asked Blake, "Are you more of a position trader?" If I time a good entry and I have a good theme behind what I'm doing, I'll take a position in the market. So, like, let's say I'm really bullish the pound, and which I'm not, but let's just say I was, and I picked it up at a great price today, and I'm up 100 pips. Then I put myself in a position to try to hang on to it longer. You know what I mean? I always try to do that, but it doesn't always work that way, you know. But if I have some sort of theme I'm trading on, I'll try to get myself positioned nicely to take advantage of a longer term trade. Cable, new highs. Damn, I got out of that pound Aussie so early. I hope that answers your question. Okay, sorry, we're going to continue on. Did the peso. Let's go over to the Norwegian krona. 38% retracement. Remember this? 38% retracement. That is at 816. Resistance 822. 816. 822. We're in a range. And when's Carney speaking? Oh, he's speaking in about 10 minutes. Interesting. Okay. US dollar, Swedish krona. Now, the US dollar, Swedish krona, even though I got out of mine, we bounced right at the breakout point, which is very key support, 888. Support 888. I think there was some pretty good data that came out of Sweden overnight, too. Pound still at highs, near highs. Gold's getting good bounce, $4 bounce after being under some pressure today. Sorry, I think, oh, you know what? Let's finish off the Swedish krona. Resistance is at, now this broken trend line is going to come back into play, which is at 9. And we are in a range. All right. So there's your bias chart. It's finished. I have a feeling it's going to look a lot like this until after Tuesday. After Tuesday, this is going to change quite a bit. The elections are going to be the driver. Okay.